I'm Umesh from 361 Asset in Mumbai. It's my pleasure today to stand here before you and talk about a subject which is investing in private companies, which I'm personally very passionate about. So I will show you images from a movie on my next slide. I'll ask you to guess which movie is this. Anybody? Absolutely. You are absolutely right. You must be wondering what's happening here. This is supposed to be a serious presentation about investing. But when it comes to investing in private companies, there's a lot to learn from this movie. So can anybody describe what this movie is about in just 3 lines? Does anybody want to volunteer? Please. Huh? Okay. Okay. And huh? No, okay. So this movie is about a Khosla family, which is just like the family that you and I have, who has a dream to build its own house. So he goes and buys a piece of land from a local broker, and then there's a Kishan Khurana who comes in, who is about to shatter his dreams. So let's look at this in context of in the context of investing in private companies. So private companies offer a very large universe, okay? And I'm not talking about angel investments or early stage companies. I'm talking about investing in companies which are going to IPO in the next 2 to 3 years, okay? So they have reached a certain size and a certain level of maturity in their business models and profitability. So I said, okay, let's look at a threshold of $6 million or 50 crore of EBITDA, okay? And I find that there are 1,400 such companies. And these companies are names whose products you and I use on a daily basis. Like, Book My Show, Dr. Agrawal Eye Hospital, Haldiram's, Lahori Jeera, Winnie Cosmetics, Rare Rabbit, many of these companies. Now, we are all equity investors here. And we may ask, is private companies ke jhanjat mein kyun jana hai? There are so many listed companies available. So there are about 2,200 companies listed and trading on NSE, and with the same threshold. So leave aside the top 100 large cap and 150 mid cap companies. So 251 se lekar ke 1,000 tak, with this criteria of 50 crore EBITDA, there will be about 600 companies. Okay. So clearly, private market is indeed a very large universe to tap. Sorry, I went too fast. Sorry, still learning. Yeah. Okay. Uh, and these private companies, at the stage that I'm talking about, which is 3 years to IPO, okay, they raise much more money from the private market than when they go to IPO. So last 4 years, annually, these companies have raised $12 billion a year, which is almost a lakh crore a year, over 100 transactions. As compared to the IPO market, which is averaging close to $6 billion a year across 50 IPOs. So clearly, private companies is not just a big universe, but they also offer, but it's also a very vibrant deal market. So giving you opportunity to invest. And these investment opportunities, they come across sectors. So healthcare, pharmaceuticals, retail, consumer, financial services, manufacturing. So you can build a reasonably diversified portfolio of even private companies. Most important thing is private companies offer you opportunities to invest in innovative and unique business models which are not available in public market. So in last 2 to 3 years, some very interesting companies like CAMS, Keynes Technology, Mankind Pharma, MediAssist, Prudent have come to market. I want to ask, how many of you have invested in these companies? So it must have been after IPO or in IPO, right? So would you not have preferred to invest in these companies when they were private? Exactly. So you have a bunch of companies which I will call innovators from the perspective of the public market, because when these companies on my right side, ASG Eye Hospitals, HDFC Credila, Indira IVF, Lenskart, when they come to public, they will be first of their kind. So we have seen how strongly the capital market welcomed these companies and how they got re-rated. So you will always want to own these companies before they come to the public market. So did you know that there are more than 100 unicorns in India, right? And of which only 10 are listed. But even those 10 have a total market cap of $58 billion. Out of the remaining 90 or 95, even if another 10 companies come to the market in the next 2 to 3 years, which is very much possible, they will add at least 60 to 70 or $80 billion of market cap. So we are all equity investors. The first thing that we ask, company kitna grow karega, right? And that is what has been in the earlier presentations also, that valuations follow earnings growth, or revenue growth, earnings growth. So you look at the listed small cap universe that I talked about, from FY18 to FY23, in the 5 years, that universe on an aggregate basis has grown at 9.5%. But the private companies I spoke to you about, they have grown at 15%. Why is it like that? Because when these listed companies, so when these companies become listed, their life becomes quarter se quarter tak, right? So they have to balance growth and profitability, because a company ने announce कर दिया कि अब मैं major expansion कर रहा हूँ, तो EBITDA next 8 quarters under pressure, that stock will become range bound. It will not go anywhere for that period of 8 quarters. Lekin private companies don't have these reporting pressures, so they can continue to invest in new markets, in new products, and therefore they grow faster. And let's look at some examples. I'm sure many of us are investors in these companies, right? Campus Activewear, it grew 28% before IPO, but 10% after IPO. Look at Awas Financier, it grew its AUM at more than 50% prior to IPO, but after IPO 30%. Metropolis Labs 18% before IPO, but 10% after IPO. They were also acquiring a lot more before they got listed, but after the listing, they've also become a little more cautious, right? And these companies are available at reasonable valuations relative to public market. So let's take the example of multi-speciality hospitals, okay? We must be investors in Max Healthcare, we must be investors in Medanta, they are all based here. So in the private market, when a multi-speciality hospital does a deal, it is valued at around 15 times EBITDA. वो IPO करता है at around 18 to 20 times EBITDA, and after 6 to 8 quarters of listing, they start trading at 23 to 25 times EBITDA. Same is the case with devices companies, with diagnostic companies. So when Metropolis or Dr. Lal, they acquire a company, they pay them only 8 to 10 times EBITDA when they are themselves trading at 20 to 25 times EBITDA. So there is a clear arbitrage that even these big listed companies play, right? And this is true across sectors, cosmetic companies, personal care companies, जहाँ पे revenue multiple पे उनका valuation होता है. So private market में 4 to 5 times revenue, they IPO at 5 to 6 times, and eventually in 2 years' time, they trade at 8 to 10 times revenue multiple. So we must be investors in Bikaji. I think here, I'm sure in this room, there will be a lot of investors in Medanta, Bikaji. So Medanta IPO valuation, it was 15x, but now it is 30x. Bikaji IPO valuation 22x, but now it is 48x. And this is despite the fact that growth rates would be lower, because public markets always tend to value companies higher than the private markets. इसका reason ये है कि in public markets there's a lot of supply of money. There are lots of there are lots of constituents now. There are FIIs, DIIs, HNIs, retail, so many PMSs, so many IIFs, जो केवल वो top 500, 600 companies को ही chase कर रहे हैं. There may be 3,800 companies on BSE and 2,200 on NSE, but the chase is only for the top 500, 600 companies. And that is why you see this overvaluation. So let's take the example of ICICI Lombard, and I have 2-3 examples of very different kinds, okay? So ICICI Lombard is a company which is now listed for 6, 7, 8 years. So इसकी listed traded history अब काफ़ी है. तो उसका IPO हुआ था September 2017 में, and 6 months before that, there was a private round. You can call it a pre-IPO round. That was at a $2.4 billion valuation. And when this company came to the market, it was the first general insurance company to get listed. So there was a lot of excitement. And it was also the market leader. So market leader bhi hai, the first insurance company bhi hai. So it got, the IPO valuation was 3.6 billion. And then over the last 6 to 7 years, as there has been the earnings growth, the valuation has also gone up. So the MOIC, in the private market, we see MOIC, which is money on invested capital, as much as you see IRR, right? Because in the listed market, it is more IRR, but in private market, you also have to see MOIC, because the expectation is that the valuation will see uptick little faster, okay? So MOIC for these pre-IPO investors in under 6 months was 1.5 times. But the public market investors who came in the IPO, for them over 84 months, which is more than 6 years or 7 years, the MOIC is only 3.3. But overall, if you are a pre-IPO investor and you continue to hold this stock, your IRR is very healthy, 24%. Now this is it's an extreme example. A company like KFinTech, which did IPO in month of November 22 at valuation of $730 million. But 18 महीने पहले there was a pre-IPO round, which was at a valuation of only 215. So in period of 17 months, there was a 3.4 times uptick in valuation. And uske baad also the story has continued from IPO valuation of 730 million, it is now 2 billion. So this is an extreme case. Not all companies will do like this. But अगर आप एक 15-20 companies का portfolio बनाएंगे, so there will be 2, 3, 4 companies like this which will take the IRR of the entire portfolio very high. Okay, and similar is the case with Zomato. I think this I don't have to explain. I think all of us here are investors in Zomato. But Zomato also, it saw a big swing up and down, right? So IPO valuation was 7 billion, but usse pehle in February of 21 there was a pre-IPO round of 3 billion, and usse pehle there was a round of 1.6 billion. So that's a kind of valuation uptick that you get in companies which are of a certain size and scale and which will be IPOing in the next 2 to 3 years. So all this story is good. Okay, अब तक जो सुना बहुत अच्छा है, that इस sector में growth भी है, it's a big market, right? But the holy grail in private company investing is not returns. It is second. The number one is liquidity. मुझे exit कैसे मिलेगा? क्योंकि remember this is private, ये listed नहीं है. So that is the first question you have to ask, कि इसमें liquidity कैसे मिलेगी? उसके बाद return. So if you're owning some of these companies directly, do you want to find yourself calling this broker in Kosa ka Gosla, भाई इसे exit दिला दो, right? Or find very ingenious ways like how Khosla did in that movie to get exit? The answer is no. Because the deal market in India has now become very deep and very matured. So in 2018, there were 175 exits, okay, of private investors in the markets. That number has consistently gone up. Of course, there was a blip during the time of 19 when we had the credit crisis of DHFL and Yes Bank, and then COVID. But now consistently 250 to more than 300 transactions are happening where you can get exits. and of substantial value every year. More interesting than this is that these exits are not just in the public market, which is IPO. So you're not dependent on कि ये company list होगी तभी exit मिलेगा. But the other half, so the first 50% is the capital market, but the other half is where secondary sales and strategic sales are happening. So I'll give you an example of a company called Aavas Financier. It was owned by financial investors fully, okay? In 2016, it was bought by financial investors completely. They did IPO in 2018, so exited partially. Then in 19, not in 20 because it was COVID period, but 21, 22, they exited through multiple block deals. But yet, they owned a very substantial part of the company as till the middle of this year. And a few weeks back, they've sold the company in a control transaction to another buyout fund. So multiple ways of exit is available to private equity funds now. Not just public market, but they can do a private, they can do a strategic sale in a listed company also. So now the question is, should I take exposure in these private companies on my own? Yes, you can. Call your broker. He will give you a list of companies, right? And he will sell you what he has at that time. Because see, it's not an active market कि काउंटर पे सब स्टॉक्स अवेलेबल हैं. उस वक्त उसके पास जो इन्वेंट्री है या जिसके पास उसके लिए जिस स्टॉक के लिए उसके पास एक सेलर है, वही आपको बोलेगा कि ये बहुत अच्छा स्टॉक है. उसकी प्राइस भी जो वो बोलेगा वो आपको देना पड़ेगा. चलो ठीक है, आपने खरीद लिया, राइट, थिंकिंग कि IPO is around the corner. I want to ask, how many people in this company own NSE, OYO, NSDL? You got OYO? Okay, very good. You got NSE, you? NSE. So, ठीक है. So I think many of these companies have done well. Okay, NSE, the value has increased substantially. In NSDL also, value has increased. I'm surprised nobody owns studs here. It's a Delhi-based company. Okay, I own I own studs in my personal capacity, though I'm in Bombay. So all these companies have done well, but fundamentally, we came into these companies thinking that IPO is around the corner. But it is more than 5 years that each of these companies here have not been able to list. For very legitimate reasons. Each of them has very, very valid reasons that they could not list. And no fault of their own. Okay? But we have not got the desired liquidity. We still have to call the broker. मेरे को NSE बेचना है. It's a 6-month transfer process for you. Right? A 6-month transfer process for you. So, and in this period when this stock will be unlisted, okay, which can be 1 to 5 years, you have no information rights. एक साल में after the March ending, after 4 or 5 months, there will be some annual report that will come. Okay, there will be no quarterly con call transcript or investor presentation. You have no control on governance. कि company में क्या हो रहा है, right? And valuation is very opaque. आपको जो broker बोलेगा ये price पे बिकना है, आप बोलोगे यार इसको बेच दो, because I want liquidity. So now there are also some interesting companies. Has anybody heard of a company called Bluestone? Yeah? Do you know something about it? Yeah. So it's a very exciting company. It's like Carrot Lane. It's almost, say, 1/3 the size of Carrot Lane. But now, after Carrot Lane is now owned by Titan. And the growth in Titan is now driven by Carrot Lane. But Carrot Lane will never come to the market because it's 100% owned by Titan. So this is now the only company in the jewelry retail space that can come to market in the near future. And as you know, in the last, you would have read 1 year, when there is so much pressure on consumption, for some reason, jewelry is the only sector where there is no pressure, right? So Bluestone is a company that has grown at 50% CAGR for last 5 years, 50% revenue CAGR. And it has also starting from online, it has become now omni-channel. It has now 175 stores. It has turned profitable. Its valuation has moved from $72 million in 2018 to close to $900 million now recently. A round has happened as early as 1 month back. Okay? Now this type of company is not available in private market, meaning for HNI investors to buy directly, because they prefer a tight cap table. They prefer to deal with institutional investors only. When they raise funds, they want to do it quickly in 3-4 months, and they want a big amount of money just coming from 1 to 3 investors. Similarly, Vastu Housing, anybody heard of? Yeah. Housing Finance. It's a company created in just 8 years, with now ended FY24 with a 10,000 crore AUM, 3,300 crore of net worth, and delivered ROE of 13%. And it will list in the next 2 years. But again, very tight cap table. So the point is that when you will rely on brokers to give you unlisted companies, he'll be giving a very small universe of companies, whereas there are 1,400 companies that you can look at. So now comes the question of returns, right? The whole thesis of presentation was that can private companies enhance our returns? So if you look at the rolling CAGR of index for the last 3, 5, and 10 years, okay, whether it is Nifty 50 or mid cap or small cap, it is actually only in the early to mid teens. जो ये recent जो outperformance है 50% of mid cap, small cap is only last 1 year, right? And it's unlikely to be repeated. But over a long period, it will be in the mid teens. If you add a flavor of private companies, those companies will help you enhance your returns, because they will give you between 20 and 25% return. Okay. So can you afford to miss this large opportunity of investing in private companies? I don't think so. Because even today, 10% of NSE's market cap is constituted by 239 companies that listed in the last 5 years. And 400 companies, private companies, have raised $40 billion in private market in last 4 years. And the good news is that many of these 400 companies will list in the next 3 to 5 years, and minimum, they will add $120 billion market cap. So it's absolutely imperative that you catch these companies young, at least 2 to 3 years before the list. And that's where my invitation to you is to work with a large asset management company where the fund manager has a significant deal sourcing capability, okay, the ability to reach these 1,400 companies and pick out 20-25 to invest in them, do a fair price discovery, okay, do full due diligence. It is extremely important in private companies. Do accounting, tax, legal, financial, commercial due diligence before you invest, and maybe even give you co-investment opportunities to enhance your returns, right? You like some companies a lot and you want to invest in that, don't invest directly, invest through the asset management company. And post-investment, because typically a fund manager through the AMC will own 10, 15, 20% of a company. He'll have a board seat. He can ensure a minimum level of governance. He can ensure minimum level of information. And last but not the least, the most important is exit. Exit and exit. Through proper price discovery at the time of exit, and कोई भी reason से IPO अगर अटक जाता है, and it can happen like we saw. Some examples. If IPO gets stuck, then he can work to find alternative routes through secondary sale or through even strategic sales. So now a little bit about ourselves. This is the last slide. Okay. So we are 361 private equity. In private equity, our live AUM today is 24,000 crores. And we have returned 14,000 crore in the last 3 years. Okay, so we are an 8-year-old AMC. We've been investing since 8 years. Some of the earlier funds we have returned. We today have 122 portfolio companies. We have 30 unicorns in our portfolio. Okay, we are a 36-member investment team. In FY24, We made 15 investments, we exited from 20. We are the only AMC in the country which has a strategy to invest right from the seed stage to pre-IPO. Because all of you will have different risk appetites. So we have different fund managers and different dedicated funds for each strategy. We have a strategy for early stage investing, for mid-stage venture investing, then for growth stage investing, and for late stage investing. What I do in 361, I take care of the strategy which is a late stage and pre-IPO. We also have many firsts. So we were the first ones in 2016 when we started this business to launch India's first fund of fund. So we were LPs to 14 other funds. Okay. Then we launched the first pre-IPO fund in 2017. We launched the first private multi-asset fund in 2023. And in this year, we launched India's first dedicated secondaries fund, which basically invests into companies by buying stakes of other funds. So other funds who have reached end of fund life, but where the IPOs have got stuck and are not able to exit because their fund life is coming to an end. So this fund goes and buys the stakes of those companies, goes and buys the stakes of those funds in those companies which we believe in next 3 years will IPO. So I encourage you to dream like Mr. Khosla and his family to build a portfolio of private companies and work with us in that journey. Thank you very much.